Hey, welcome to Financial Sense. My name is Anthony Murray with my lovely co-host, Miss Mad Flo. She's going to tell you a little bit about why we're here today because this is your show. This is for you. Mad Flo?
Hey, everybody. Good afternoon and welcome to your show. Just like he says, we're called Financial Sense, the new podcast on the All Things Relevant media platform. Hey, we're excited about you joining in conversation every Friday, 1 p.m. So make sure you set a goal for yourself to be here with us every Friday at 1 o'clock right here on All Things Relevant Media on Facebook and YouTube. I'm Mad Flo. They call me Mad Flo. I'm not crazy now, okay? I'm just making a difference for life and others. That's what Mad Flo stands for. And tell you a little bit about me. I am a retired police captain from the original Chatham County Police Department. Yes, I did 25 years of serving our community, enjoyed it immensely. And now what I'm doing right now, I'm married 20 plus years, fabulous husband, 3 fabulous daughters, 3 fantastic grandchildren. And now I work with World Financial Group and World System Builder, which is a division of World Financial Group. I am a financial educator. This is what I love doing. This is what I like sharing. And we're fantastic at what we do. I love it immensely. So, we're missing one of our cohorts today, which is Tanya. She's not here
Tanya.
today, but let's go to Anthony Murray so he can tell you a little bit more about himself and let's get this day rolling.
Well, hey, folks, I'd just like to say thank you for being here today. My name is Anthony Murray, and I also am part of World System Builder, World Financial Group. I'm so blessed to be part of this podcast called Financial Sense. My background actually is in business. I'm also a pastor, but my background is in as far as business wise, my background's in sales and insurance and real estate investing. And so I've been doing this for a minute here. I mean, I know I look young in spite of all this stuff here, but I've been but I've been doing it for a minute, and so I like to encourage you to contact a friend, call a friend. You don't want to miss what we have to say today. All right. You do not want to miss it. All right. My educational background is also in this area, dealing with financial literacy. I'm a financial literacy educator. So what do? I teach people how money works. And that's about all I can say about myself. I just love helping people. We definitely are going to miss our our partner, Miss Tanya. She's on vacation today, but she'll be back with us soon. Uh, Tanya, enjoy your vacation. I hope you're tuning in. What a wonderful person. So we have a lot to discuss today. And as we're preparing, we're going to do just a little recap of what we spoke about last week. Remember last week we talked about
Life
different
insurance.
life insurance. That's right. And so what did we say about life insurance?
Well, it was one thing that we definitely know is the fact that something we don't want to talk about, but it's something we always need. And it's not a very interesting topic, but it's two things that we wanted you to know from last week is the fact that GoFundMe is not life insurance.
It
And
is
there's
not
something
life
else.
insurance. Boy, we need
Right.
to say that a whole bunch of times.
And as Anthony said before, passing of the hat is not life insurance. In the
That's
church,
not life
passing of
insurance
the hat
either.
is not
Yeah,
life insurance. So
yeah,
we talked about two types last week, really emphasized on term and whole life last week.
right.
And we're going to talk about other types because there's always more than just those two that a lot of people do not understand, and we want to get you to understand those other types of life insurance. You can make a good financial knowledgeable decision when it's time for you to make that choice on what type of life insurance you like to
Yeah.
get.
And so last week, remember, we spoke about temporary life insurance, which is called term. And we talked about permanent life insurance, which is called whole life or index universal life, is a different type of whole life policy. And so we spoke about that. One of the things I wanted to do this week that's extremely important. Hey, Mike, Tanya's on vacation, man. She is on vacation. We miss her too. One of the things that uh, that we want to give to you today that's extremely important is that when you are buying life insurance, it is extremely important that you understand what questions the life insurance agent is going to ask you. We're going to have to ask some personal questions. Why?
Mm-hmm.
Because we have to make sure that you could afford what you want. All right. And we have to comply with government regulations. So it's the life insurance industry is a highly regulated industry. All right. Highly regulated industry. So one of the things we do at World Financial Group, World System Builder, is that we conduct what is called and I just want to show you a little bit here. I don't know if you can see it. Let me see. There we go. A personal financial
PFS.
strategy. All right. Extremely important. Why is it so detailed? Because a lot of people think they could afford a certain amount. Unfortunately, a lot of people wait till they're older to buy life insurance, and they don't realize that the cost goes up with age. And if you have sicknesses or ailment, then you could be what is called rated, which means that the price that you're going to pay is going to go up even more. So life insurance, like milk is sold in ounces or quarts or gallons, right? Well, life insurance is sold in units of 1,000. All right. And so when you see the commercials and they say it costs this much for and where it starts, they're talking about per unit. All right, per unit. So now let's say if you're 55 and or 65 and you want to buy per unit, that low price may not be applicable or may not apply to your age or to
Mm-hmm.
your health. All right, because it's based on your age and your health. And then let's say if it did, nice low price, but now you want $100,000 of that particular coverage, right? So 1,000 times whatever is going to, let's say it costs 11.95 per unit. 11.95. Just do the math real quick, and you want what, 100,000? Let's say 100,000, $100,000, right? So we're just going to play a little bit with it. So 100,000 times $11 is going to run you $1,100. All right, you follow, per month.
So
All
those
right.
units are usually $1,000 per unit. So the
Yeah.
unit starts at $1,000 per unit. So what
Yeah.
Anthony just broke down to you, if you wanted $5,000 worth of life insurance, let's say 500,000,
Right.
it's going to cost you per unit. Now, let's say if you're 25 years of age, per
Uh-huh.
unit per thousand would probably cost you $2 per unit. So that's $2 per thousand. So
Right.
if you wanted 500,000, you break it down. And that's how you would come up with that. Now, what if you wanted, if you were 60 years of age? Now per unit is going to be higher. The per unit is still 1,000, but the cost of that insurance is going to cost you more.
It's
It's no
going to
longer
cost you more.
$2 per unit. Now it will cost you maybe up to $25 per unit.
Exactly.
So the cost of insurance it increases every year. It does not stop. It continues to increase every year. So the best time to get in covered with life insurance is when you're young and you're healthy. That's the best time. But
Absolute best time.
the most critical time, if anybody think about it, you can get your children insured at
Mhm.
age 15 days old.
15 guys, pay attention to this. 15 days old. Now listen, let's say that let me go back into this real quick about this personal financial strategy. What are some of the questions that's going to be asked? Of course, your name, first and last name, your date of birth, if you're a smoker or not a smoker, your phone numbers, your email address. That's very important, right? And then we like to know, what are your goals, so that we can help you later on, so we could help actually select the right type of policy for you. All right. Some policies are just like a whole life policy. All right. It's not really, it's going to accumulate cash value, but not as much as a index universal life. All right. So there's different things that we look at. And then with the index universal life, you could do something called overfund. So we ask these questions: what are your goals? And then we have a selection: retirement, education, home, vacation, long term care. Then we ask your monthly income. We need to know that, all right? Your monthly expenses. We get into the detail, everything down to your cell phone bill. Why? We're not trying to be nosy. Here again, everything is highly regulated by the government. If we try to sell you something that is too expensive for you, then we could get in trouble. And I don't want to get in trouble with the government. It's not worth losing my license over a few dollars.
I see that's called suitable, guys. It has to be suitable for the client. So we have
Absolutely.
to go through that process, make sure it's suitable for the client, which means they can afford it. They won't have a hardship just because they got it. So
That's
we
right.
have the personal financial strategy. It helps us as well as help you to make sure if you're suitable for any type of life insurance that you're trying to get.
Right. So
It's
now we
suitable.
have a method we use called the DIME method. All right. DIME, DIME, the DIME method. D stands for debt, I for income, M for mortgage or your rent. All right. A lot of people have a mortgage, all right, or they have rent. So we try to gauge. We want to find out what your monthly income is. And then E for education. If you have young children or even yourself, if you plan on continuing your education, or we look at every aspect and every different angle that we possibly can, so we can make sure that what we're presenting to you is what Matt Flo said, suitable, financially suitable. All right. Because there's no sense in buying an insurance policy and then 3 months, 4 months, 5 months down the road, you decide, hey, I don't need this. It costs too much. All right. So we look at your money, and there's a calculation that we use, and we determine from that your discretionary income. That means money that you have to play with, to save
Mhm.
or whatever, based on the information that you give us. So it's critical that when you're with a financial professional, that you be as upfront as you are comfortable. All right. Understand that we have a job to do, and that job is to make sure that what we present to you is financially suitable and that it does what it needs to do. All right. Especially if you have little kids. Okay. Especially if you have little kids. Hey, Flo, why don't you tell them a little bit about the pyramid with debt being first, I mean, the protection, and so
Oh,
forth and
yeah.
so on.
We always want to start. If you wanted to start a goal as far as financial planning, you really have to do something. And I'm going to show you everything that we talk about, like I said before, is in something called a blue book. We call it the blue book, but it is really the Saving Your Future book. Again, you can get this book right here for $4. It has all the information in here that we're discussing. And on page 6, I'm going to go over something with you on one of the pages in here. This is called the financial foundation. So you want to build a financial foundation, but how do you build a financial foundation? First of all, it's like building a house. You can't build it from where? The ground. You can't build it from
The roof,
the top, right?
from
You
the
can't
roof,
start with
right?
the roof. If a contractor comes to you, you want to build a house, and he says, "Hey, I got everything. We can start with the roof first." You would kick him out of your house, right? You would kick him out because you know he does not know what he's talking about. You have to start from the ground and move it up. The first thing you want to start with is going to be protection. And that's what we're talking about today. Protection, life insurance, making sure that you have this solution here. And why do we want to start with protection first? I'm going to give you a little scenario. You start with protection first because if something happens to you, basically, where is where would the replacement income come from if you were to suddenly just pass away? You're no longer here, your family needs you, and they do need your income that was bringing in to take care of everything, but it's not there anymore. So your protection is the first step that you need to build your financial foundation. Next, what you want to start with, you have to have some sort of debt management. What we talk about with debt management, you have to manage that debt. You have to get rid of your debt as soon as you can, because if you think about it, you're paying interest, 4% interest, 6% interest, 10, 20, 30% interest here and there. That is money that could be coming back to you to help you build your foundation rather than help someone else build theirs. So you have to get rid of your debt. And we do have in our programs, we do have workshops. In our workshops, there's something that's called the snowball effect. And we go over that in the workshops, one of our workshops, financial workshops, that shows you how you can use the debt roll-up plan, the snowball effect, in order to eliminate your debt as quickly as you want to eliminate it. So you want to make sure you clear your debt. Now, how else you want to build your foundation here? This is called an emergency fund. So, what is an emergency fund? What constitutes emergency for anyone? It could be with me. What if I have to go to the hospital? That's an emergency. Who's going to replace the income if I'm in the hospital and I can't work? What if I have an accident? What if I lose my job? If I lose my job, and most people, when they're out of a job, they're usually out of a job for almost 6 months before they get another job to replace that income. So, with an emergency fund set up, what the emergency fund is going to do for you is replacement income. You need to set aside anywhere from 3 to 6 months of your regular monthly income or your expenses, whichever is highest. I use my expenses. And so I make sure that I have built up in my emergency fund anywhere from $6,000 to $10,000 set aside so that if something happens to me, guess what? That money there could take care of all of my household, take care of all the bills for me until I get back on my feet. So, emergency fund. Now, after we have those three things set in place, now you can work towards your retirement plan, working towards investments. But you might be asking, why do investments last? Why think about doing investments last? Let's look at it this way. Let's say that you did not set up a protection for your family. You went on and you applied for your 401k at your job. You applied for mutual funds. You applied for different investments, IRA, Roth IRA. You got all this stuff in place, but you don't have any protection. And then all of a sudden something happens. You pass away unexpectedly. Now, everything that you have built up without the protection, it has to go through something called probate court. And when it goes to probate court, guess what? It may take a while, could be years. We talked about this 2 weeks ago. It could take years for that money to be released to your family. But if you had protection in place first, you passed away, something happens to you, passed away unexpectedly. Now, guess what? You have, even though all that other stuff is in probate court and it's not released to you yet, you have that life insurance, $100,000, $500,000. Your family have that immediately so that they can take care of what needs to be taken care of. So when you want to build your foundation, when you want to build your financial foundation, you have to think about the pyramid, as he said. You have to make sure those things are in place. Don't do it backwards. Don't do it the other way around. Make sure that you start with your protection for you. And then because protection is just what it says. It's an income replacement for your family if something happens to you unexpectedly. So we want to make sure that you follow this right here. And I'm going to read just what it says right here so it'll be plain and simple. First, you should have proper protection in the event of disability, health problems, or premature death. You should reduce your liability and get out of debt as soon as you can. You should set aside 3 to 6 months of your income to deal with sudden changes in your job or business or to pay for unforeseen accidents or repairs. And you should save and invest for the long run. So when you're building your foundation, you're saving for the long run. So all these tasks should be done as soon as possible. So when you want to start building, and I swear I'm hoping that we have some young adults on here. I love our older people because they're more stable and maybe they need this information as well. But if we can get our young adults to start taking the steps that's necessary to secure their future by making sure that these steps are in place, by the time they get to my age or even Anthony's age, I think Anthony's a little bit older than me, but both look young.
Hey,
But
look, it's all right.
when they get to our age, they will be financially set. And it's because they took the steps in their younger years to start doing what needs to be done and taking the steps to make sure that they can secure the future. And just think if you're not married now and you go ahead and get your life insurance now when you do get married, guess what? As one step you don't have to worry about. Only thing you have to do is make sure that your spouse is covered. But you have the life insurance for your family. So if something happens to you, you're building your family. Now something happens to you. And like I said, this is it's not a happy topic, very exciting topic, but it's something that needs to be discussed.
It's
And
very
you
much
need to
needed.
with your family, you need to discuss these things.
All right, now, guys, listen to me. A lot of people depend on the life insurance from their job. There's nothing wrong with that. If you have life insurance from your job, more power to you. Thank God for that. But what happens if that job closes? Or what happens if you switch jobs? All right. What happens if you switch jobs and a new job does not have group insurance? All right. They have someone that come in and sell you individual policies. Then what? So the younger you are, the less it will cost, and you can get higher or a greater amount of coverage. All right. Always play it safe. have outside coverage aside from your job. And if possible, and you could afford it, get permanent coverage. Temporary coverage is fine if that's all you could afford, to do that. There's a lot of good policies out there. We deal, Matt Flo and I deal with 100+ companies. So we have something that'll help just about anybody and everybody. Now, I want to go over this really quick. And I say just about. We can't help 100% of the people. There will always be that small percentage that we can't do anything. All right. So, but we can help the majority of the people. Now, remember I said dime method? I just want to explain what it is. D, debt, remember? That's your credit cards, loans, and other debt. What about income? We calculate the income portion based on a 10-year period, your annual income for 10 years. Why? Because if you're married or if you have children, all right, you want to help them maintain rather, excuse me, the same lifestyle that they were accustomed to when you were there providing that income. You understand what I'm saying? So if your income contributed to the maintenance of the house, the repairs, the gas, the car insurance, so forth, all right, we want to make sure that that person is taken care of for at least a 10-year period till they can get back on their feet. As you know, death is a major trauma to anyone, and it's hard for some people to get back up and running because they lost a major part of their life. Then the M for mortgage or rent. So the mortgage, we look at your mortgage balance or mortgage balances. Rent, we look at your lease. So if you have a 1-year lease, we calculate how many months are left. And if you plan on staying there, then we calculate second year, but you always take into consideration with rent that there may be a rental increase. All right. And then the last thing, education. We look at education, especially for folks with young kids. We look at it on a 4-year basis, and we guesstimate that it'll be around $15,000 a year. So let's say there's 2 children, then we're looking at possibly around $120,000 to cover both those kids for 2 years, looking at books, so forth and so on. So it's very detailed, very important. And you want to make sure whoever you're dealing with, they ask some of these questions instead of just, look, I just want to get some insurance. I had people like that got offended. They said, look, I just want a price. I said, I can't just give you, I can give you a price if that's what you want, but I don't know if you could afford it. How do I know you could afford this? All right. It's a very, life insurance is a very, as I said, government regulated industry. It's very critical. It's not something you want to play around with. You want to make sure. That's why for 2 weeks, we talked about having a trust or a will. If you cannot afford a trust, then get a will. But if you could afford a trust, get a trust so you could bypass that probate court. Now, very important that Flo brought up, the death benefit from life insurance bypasses probate. It goes straight to the beneficiary. All right, extremely, extremely important. You know, our workshops are extremely detailed. This is our workbook. Our workbook. All right, you guys see that? And I have mine in a binder here, but I just want to show you one of the pages here where you fill it in. I don't know if you can see that. All right, you fill in the information. Okay, there you go. You fill it in. You work right along with the videos that we're showing right now, everything's done on um,
Mhm.
on the internet. So you don't have to worry about going anywhere. You do it from the convenience of your home. All you need are the books, right? So
Let's
uh,
take a break down that dime from a real quick with a scenario. Okay,
good.
you guys, Anthony just told you about the dime, so we're gonna break it down for you. Just think about this, okay? So we say debt. Let's say you have $50,000 in debt. Okay, so that's your debt. Total debt 50,000. That is your credit cards, your car notes, or any other debt that you have minus your mortgage. Everything minus your mortgage. Now let's say that we also include, because you have to include your income, and your income is always going to be 10 times whatever your income is. We're going to put, let's say hypothetically, your income is 60,000, but we're going to add 10 times that is going to be 600,000. So we're going to put your income at 600,000. Why do we put the 60,000 at 600,000? Because that gives your family, your loved ones you left behind, 10 years of annual income coming in, $60,000 a year coming in for the next 10 years. Okay, now we're going to break it down to, let's just say your mortgage. You have a mortgage of $150,000 left on your home. And you're also going to include the education, just like he said, with two children, $15,000 a year for 4 years, come up to about 120,000. We're just going to shorten it up to, let's say you want to leave your child $60,000 in case you pass away before that child finishes high school and be able to go to college, and you're able to have that set aside for that child. So let's say that's 60,000. So your total debt is looking at $965,000. That's 50,000 for debt, 600,000 for your income, your mortgage 150, child's education 60,000. That's $965,000. But we're going to do this. Let's just say that you already had $50,000 already set aside of insurance. So you have $50,000 of insurance, but you have a debt of $965,000. So how much shortage are you? You're short by $910,000. So you see that
810,000.
50,000, 965 minus 50,000,
Oh, okay.
900.
All right. I'm with you. I'm sorry. Yes,
Okay, so
915.
that's 910,000 that you are short. So how's your family going to survive? You passed away, you got $50,000, but you got all this debt. Your children won't be able to go to college. And really, you just put your family in a dire situation of financial ruins. They're going to lose their home because they're not able to finish paying off the 150,000. If you had the right amount of insurance, they could pay off the mortgage and stay
Right.
in their home. Your child could go to college. They would still have the $60,000 of income coming in because through the life insurance. So life insurance is an income replacement. And when you get life insurance, do like I do. I look at it as a bill because you know what? I will pay a bill, and so many people out there will. They'll pay a bill before they will pay the life insurance. But I have been schooled, and I know that life insurance is more important. That monthly bill I pay is more important than a cable bill. So if I get to a position, and we all probably went through that through COVID, to the point where we lost our jobs and we can only maintain a certain amount of bills to pay every month with what we have coming in, and what someone would do, most people would do, they would just stop paying the insurance and they keep their kids. We have to stop thinking that way. We have to realize our
Absolutely.
family future means more to us, should mean more to us than a cable bill anytime. So
You
that
know,
break that down to you so you know how the dime method works, and that's how you calculate how much life insurance you actually need. You have to know how much debt you're in, and then you can take the next step to know how much life insurance you actually need.
absolutely. And then you'll see the value of having a trust or a will as well. Now, listen to me. This is very important information. I hope you guys are taking notes. I hope you're taking notes. All right. Please take notes. A mental note will last you for a couple of minutes, but a physical note or take a screenshot, something, record it, whatever you got to do. Give us a phone call. You see our numbers going across the bottom. You can email us as well. This is extremely important. Now, some people will say, well, I can't afford that much insurance. We have strategies that'll help you get as much as you can without hurting you. All right. As we mentioned earlier, because of government regulations, we have to make sure that this is it. There's something called suitability. We have to make sure that this is suitable and affordable for you. All right. So it's extremely important. Some people will get a temporary coverage and permanent coverage combined. All right. And you know what's interesting to me is that a lot of people today, and I don't know why, but a lot of people today will not get what is called decreasing term for their mortgage to go along with their mortgage. What does that mean? Every year, the value of your mortgage should be going down. The balance of the mortgage should be going down. Okay. Well, with decreasing term, years ago they used to add it to your mortgage, and as the mortgage went down, so did the amount of the term. And then when the mortgage was paid off, in 20 years, 30 years, whatever, so was that term coverage. What was that term coverage for? In the event of premature death, your mortgage is paid off. That's what it was for. All right. So there's things that we could recommend. There's things that you could do that'll benefit you and your family. Understand that our objective is, especially teaching this, is to help you. Is to help you. Now, Flo, we have made some notes on some other things that we wanted to discuss with them, uh, and so we want to share a few more things with you that'll help you with the remaining time that we have. Boy, time is flying.
Time
It's
don't wait
flying.
for nobody.
No, it doesn't wait.
Doesn't wait for nobody. You guys
No,
remember the benefits of life insurance before we go to the next thing. So if y'all remember, tag off from last week, the tax-free death benefit, tax deferred earnings, tax-free withdrawal, and tax-free loans. Those are some of
right.
the great benefits of having life insurance. That's permanent life insurance, not term life insurance. Term life insurance does not grow cash value, but whole life or permanent life insurance does.
That's
Okay,
right.
you guys realize that. Um, Anthony, we did take a few notes. We talked about, long-term care and understanding long-term care and why it's needed. And I'm gonna share something with you just now. I've been trying to get long-term care on myself for the last 7 years, but because of health issues, I cannot get the long-term care. So I'm keep trying. But my husband has it. I was able to get coverage on him, no problem. He's 10 years older than me, but healthy as an ox because I do everything. So I'm one stressed out a lot. But
Oh yeah, yeah.
but there was other options. So I called one of the companies yesterday to find out other options because there is something called standalone long-term care. And then there's also long-term care rider that you can have added on to certain types of life insurance, such as the Index Universal Life Plan. So my husband has the Index Universal Life Plan with long-term care and critical illness, but I was not able to get that. I got the Index Universal Life Plan, but I'm not able to get the rider for long-term care attached to it. But I called yesterday and I found out one of our companies that I can get a standalone product. And the great thing about this is I can invest 60,000. So my goal is I'm going to get to 60,000. Um, I can invest 60,000 in a long-term care plan, and it accelerates the benefits if I need it. Now the 60,000, I won't lose my principal. I won't ever lose the principal. But if I need it for a long-term care claim, I can now that money would accelerate over 100,000. So now I can use that 60,000 plus the extra that it accelerated to for long-term care and get something like maybe $2,000 or $3,000 coming in to my household that can take care of my long-term care services. So there's not just the long-term care standalone, but there's also long-term care rider that you can have added to certain types of life insurance. And I'm glad I
Absolutely.
found out because that's my goal next. Because I'm building my portfolio. I am truly building my portfolio from what I'm learning since I started with this with the World System Builder, World Financial Group, that I have to take charge of my finances. No one else is going to do it for me. I have to do that. And so we want to talk to you a little bit more about long-term care and what the issues are. And again, this book right here, Saving Your Future, everything we discuss and talk with you about is
It's
in
right in the book.
the book here. And it's no more about 86 pages. Easy to read, easy to understand.
Yeah.
Okay?
Now, hey, I want to share something with you right out of the book that Flo just held up about long-term care. Okay. Long-term care pays for the insured who becomes chronically ill, which is defined as the inability to perform at least two of the following activities: bathing, continence, dressing, eating, toileting, or transferring. All right, any of those two. Keep in mind, if you need assistance with either of those, any of those, assistance, you follow me? Assistance. That's all it takes. In other words, it's not that you can't hold a spoon, but you may need assistance. All right, with feeding yourself. All right, so
Mhm.
there's fine lines, but yet at the same time, they're not trying to make it difficult. Now there is with every company, well, most companies that I know of anyway, there is a 90-day waiting period before the long-term care benefits actually kick in. All right, now it's very important. And no, it does not pay retroactive before you ask. Okay, so that's important to know. So it's critical that you have what Matt Flo talked about earlier, emergency funding. All right, you see that
Mhm.
emergency funding is for more than one purpose, more than one purpose. All right, and folks, listen, insurance is not a curse word. It's
Ain't no
not a
blaming
curse
word.
word. All right. When someone wants to talk to you about life and death, it's nothing to be afraid of. Look, everyone that is born is gonna die. I've done plenty of funerals, and it's hard sometimes, but still, um, we are
Nobody's
born,
getting out alive. Let's just
we're
say it
gonna
that way.
die.
Nobody's getting out off of Earth alive.
Exactly. All right. So as I saying, plan for the future, for your family, for your loved ones. All right. Hey, not wrong with GoFundMe, but it's not life insurance. It's not life insurance. It's not like you can call all the family members you want. All right. They can make all the promises, and still something may come up and they're not able to get it to you.
That's
Then what?
true.
Then what? All right. So as I mentioned last week, and I asked the question, when is the last time you had a financial checkup? When's the last time? And we could do that for you right over the phone, over the internet. We could do a Zoom, okay, and conduct a financial checkup for you. That's part of our PFS or financial that information that I mentioned to you earlier. All right, um, we could do that for you. All right, it's all up to you. It's personal financial strategy. The information is held in the strictest of confidence. Everyone should have a financial checkup done annually. Why? Things change. People get married, people get divorced, uh, people have children, people buy a house, They moved from an apartment, or people sold their house, and now they have an apartment. Um,
Mhm.
Things change. All the children moved out. All right, things change, or the grandchildren moved in.
Life happens.
Life happens. And Flo, what else? There's some more things that we want to talk about long-term care. I know it's in our notes right there. There's some
You
more
know,
things that the people
long-term
need to
care.
know about.
What about the average cost, the expense? If you were to, if something was to happen to you right now, you couldn't do two of the daily living activities, and you now have to go to a nursing home or whatever. How much is going to cost you? Do you have over $83,000 annually right now available for that? Probably not. So the cost of long-term care is, it is in Georgia is over $83,000. So can you
$83,000.
afford that? I know I couldn't. That's why I'm trying right now my best to get my long-term care in place. And now I learned about the staying alone. I am working to get that in place because it's not about if you're gonna need long-term care, it's when.
When?
Because if you live long enough, you're eventually going to need long-term care. And who is your long-term care caretakers? Is it your children? Can you rely on your children? They have a life of their own. And in my opinion, what you should be doing now is making sure that you have this in place so you won't put such a hardship on your children. That's why I'm doing this now to make sure that I have long term care in place. I have my husband's in place. I need to make sure I have mine in place so I won't leave a hardship on my children trying to take care of me and my husband with no income, no replacement income to help along the way.
And not
So
just go right ahead. I'm sorry, Flo. Go right
you
ahead.
know, go ahead and say that because I was through. That I was going to go to the next step, but
Okay.
we need to
And
think
it's
about
not
that.
just kids having their own lives, but are they trained? Do they have the background to help you do?
Hmm.
But you follow what I'm saying? In other words, how comfortable are you going to be with your children seeing all your 100% of your body? All
Well,
right.
I think they'll be
How
comfortable
comfortable?
with children seeing 100% of their body, but you know what? Will that child have the strength to pick me up,
Pick me up.
um, carry me if I fall out of the bed 2 or 3 times a day? Are they capable of doing that? Are they capable of administering the right dosage of medicine that's needed? Are they
Right.
capable of doing stuff like that? I don't care. My daughter can see my body all day long. I feel more comfortable with her seeing it
Then a
than a
stranger. Okay. Okay. All right. So let's talk about the cost some more. A semi-private room, nursing home, is around $225 a day. Now, here again, we're giving you averages. All right. You may find a cost a little less, but you also may find something a little more.
high. Hmm.
All right. So the monthly cost on that's around $6,800. A
Wow.
private room in a nursing home is around $253 a day, or 76, almost $7,700 a month. Assisted living facility, they're able to get up and go on their own, right? How much is that? That's around $119 a day, or $3,600 a month. All right.
Mhm.
But they're able to do things on their own. They don't need a private duty nurse staying in their room all the time, right? What
Right.
about health aid per hour? You have somebody come to your home. How much is that? Around $21 an hour. Are you prepared for it? What about a homemaker service? A homemaker service is when you can't even clean up your house anymore.
Hmm.
If they come into your home to clean up your house for you, what's the average? Depending on where you live, is how much they're going to charge you. But the average is around $20 a day, or $20 an hour, excuse me. All right. What about adult daycare? Because they still need activities. They need to get out of the house for those that are capable, right?
Hmm.
Around $68 an hour. Are you prepared? All right. So these are things that you must take into consideration. You must look at. You must be honest with yourself. Be honest with yourself. All right. There's a lot of people that they'll. I remember years ago I was coming up, and there was Christmas savings account that my
Oh
mother had.
yeah, I remember those
Yeah,
days.
yeah. And she put $20 whatever in there, or $30 a month, whatever. And by the time Christmas came around, the money's already saved, and she went and bought the gifts. Why don't we do that for our life insurance, for our will, our trust? You
Hmm.
see, we people. I have people that say, "Oh no, I don't need that. I don't need that," as though they know when they're going to die. Do you?
Oh yeah.
I mean, has God told you something? I mean, He could. He did it with Moses and some of those guys. But if you're not that place like Moses, then you don't know when you're going to die.
Mm,
So you got to be
something to think
prepared.
about.
Yep.
Anthony, we're getting close to winding down.
Yeah.
Any closing remarks you want to go ahead and give us, because it's like we got about 5 minutes left in. But I want to share one other thing before it takes just a minute. When you talk about long-term care, if you have family members in your family that are nurses, RNs, LPNs, or whatever, you can actually hire your children if they are RNs or LPNs. You can hire them. You have your long-term care claims coming in. You can hire them to take care of. You don't have to basically have someone else coming there. That is another avenue to look at.
That's
If you
right.
have family members, hire your family members to come in and take care of you. You have your long-term care. That long-term care benefit is going to take care of that for them. So that way they can come in and take care of you and also have an income to take care of their family as well. So
Flo,
think.
that's a very good point. See, because
Mhm.
that long-term care check that is sent out monthly is usually a large sum, could be anywhere from 3,000, 5,000, $14,000. That check is
Mhm.
coming directly to you,
Yeah.
directly to you. All right, to
So think
use
about that.
as you see fit. All right,
So
and
guys,
it's
we
tax-free too, isn't it, Flo?
of course it's tax free. Never pay
It's
taxes on it.
tax-free.
If you want to find the legal way not to pay taxes, that's one way through long-term care and life insurance, regular life insurance. But guys, we got to wind down. I enjoyed today's conversation with Anthony today. Truly, we miss Tanya, but she'll be back.
Yeah.
She's out there doing her thing right now, trying to make sure everything's in order with her, with her and her job, her family. Missed her immensely. We're looking forward to seeing her back next week. Anthony, close it out for us.
Hey, guys, I want to thank you so much for being with us. I know there was a lot of information dispelled today, and we had to kick over some sacred cows, and that's all good, right? That's good news. All right. So keep in mind that we are here to help, because this is not our show. This is your show. This is for you. All right. As our numbers ran across, and hoping the engineer could show them again, take a picture of those names and numbers and emails, and contact us, because we need to send this information to you, to get these books to you, and so you could follow along, so you could attend our workshops. We're so fortunate to have you with us today. So fortunate to have you with us. We want to answer your questions. We didn't get any questions today. So, guys, write them down.
Hey, we
Write
got
down.
time enough for a few more questions. If anybody have questions, because I didn't look at that ticker up there. We still got 4 minutes,
I was
guys.
look. We got 3 minutes, Flo.
3 minutes.
3 minutes.
Anybody got questions out there? Anthony,
We
you got
got
anything
maybe
else
time
you
for
want
one
to add?
question. One question. All right. And while you guys are thinking about that question, don't forget to support all things relevant
Really?
media. Don't forget. Huh? Did I say it wrong?
No, you got it right. All
Yeah,
things
I got it
relevant
right. Yeah. All things
media.
relevant. And if you're watching on YouTube, it's ATR Black Media Network.
Mm-hmm.
All right. So listen, guys, they need your support. See, they're just not doing things here. but they're doing things in the community. All right, this is very, very helpful here. So there's our information right there for you. We want to thank you so much for being with us today. We may pick up this topic again next week. You guys, you need to tune in, and you need to bring somebody with you. Thank you for joining us for our late lunch. And
Oh,
I
and
know
one
you
other
got something
thing.
valuable. Yeah, go right ahead,
Uh,
Flo.
Check your in Facebook. I sent two links, and we was trying to put the links on the show, but we have a little technical difficulties. But guys, if y'all check your Facebook, I put comments in there. There's two links. One that really is a testimonial on living benefits, and the other one is a testimonial on long-term care. So just take an opportunity to click on the links, look at the videos, share the videos, and get to understand, the importance of these type of life insurance that we're discussing with you today.
Absolutely.
Okay.
Absolutely.
So when we get
Right.
technically knowledgeable, more inclined, we will be able to share these videos with you. We just have to learn how to do that. And so we're in a learning stage. And I want you to realize something as well, that there's nothing that we share on this show that is new information. It's only new to you if it's the first time you heard it. Like I say, we live in a
Exactly.
microwave information world. If you want to know anything from finance to cooking to building a house or anything, you can Google it, bang it, Yahoo it, YouTube it. Come to us every Friday and listen to us and get even
That's
more.
right.
But the information is out there. This is the information world. So don't hesitate to, financial educate yourself on what you need to know in order to build your financial future so you can make the better decisions in your future for yourself and your family.
Let's
Okay?
make that legacy. Let's leave something for that legacy, people. Let's leave something for them. Our children, our grandchildren, our great grandchildren. Let's leave something for them. God
Mhm.
bless you. Thank you
Other
for
than
being
our
with
debt.
us today. Don't forget to support all things relevant media. And we look forward to having you with us next week as we share some more with you on your show, Financial Sense. God bless you.
And y'all have a great day. Stay
So
safe,
much.
focused.